Welcome back, and on today's ERS Tax Talk segment, we are joined by ERS Marketing and Communications Manager Duduzo Dlamini and ERS Taxpayer Education and Information Manager Cebo Lenkosi Mahlalela to discuss domestic taxes. Good to have you both in studio, back in studio after so long.
Yeah, thanks.
Cebo, allow me to start with you. What are domestic taxes and why are they so important?
Good afternoon to you, Notile, and to our viewers as well. It's always a pleasure for us to make it to this program. So yes, today we are discussing domestic taxes and their importance. So domestic taxes are the taxes that are collected or administered within Eswatini. They may be collected from individuals as well as from businesses. They are very important because they fund government public service, essential services, which can include your healthcare, roads, education, as well as national security. So Natalie will agree with me that tax compliance is not just a legal obligation. It's actually very key and important for national improvement and development.
Yes. It adds to the importance of collaborative and inclusive economic growth. Everybody needs to play their part, that is through tax payments. While we speak on those, can we get into the different types of domestic taxes that are there and when they are actually due? Okay.
Yeah, we have quite a list, but today we will focus on the important ones and the core ones. So to start with, we will look at income tax. Income tax is paid or administered by either individuals or companies or businesses, if I may. And we expect that, first of all, a client register with us and have a team with us so that then we'll take them through the journey of how you go about. Income tax is divided into two currently. We are currently running two regimes, which is your normal income tax as well as presumptive tax. For the normal income tax, that is where we collect tax on profit. But when it comes to presumptive tax, this is relatively a new regime which is meant for small businesses who make income or turnover of between 0 emalangeni to 500,000 emalangeni in a year. And this tax is not calculated on profit but on turnover. So now when it comes to the filing due dates, we expect that clients that are registered in income tax, they file not later than the 31st of October every year. How did we come up with the 31st of October? I'll make an example of a client who has their tax year registered runs between 1 July to 30 June. We expect that you file and you pay for your income tax not later than 120 days, which then marks the 31 October after you have closed your books or after you've closed your year, which is 30 June. This applies also for the presumptive taxpayers. We also expect that they file their income tax return not later than the 31st of October each year. What we would like to highlight to our clients today is that over and above us mentioning these days, every year the commissioner is obligated and always ensures that we issue out a notice of filing where we stipulate and highlight who are we expecting to file in that year and which dates, because sometimes you'll find that maybe we will offer our clients some staggered due dates or maybe some grace periods or extension but the dates that we are highlighting today are the statutory dates to say if you are an income taxpayer, we expect that you file. Notil, I'd also like to highlight that it's not only just about filing. The dates that I'm highlighting, they also speak to the payment due date. So if I'm highlighting 31 October, it means even the payment is due on the 31 October. It's very easy. We introduced our Tax Ease portal. That is where our clients are filing. This speaks both to the normal income taxpayers as well as the presumptive tax payers. They still are expected to use the online platform, which is Tax Ease. And we encourage that they keep the dates and they do this prior to the dates that I'm highlighting.
Missing deadlines, there was definitely discouraged, but should it happen, how big are the repercussions then?
It's not good for our clients to miss the dates. I would like to highlight that unfortunately, if you miss the date for filing as well as for paying, you unfortunately will be attracting penalties and interest. They are there, they're staggered as well. We can always come back and highlight the specific penalties and the rates, how we calculate. But what I like the most about tax is that everything is embedded there. You don't need to stress how do you get to calculate. Just ensure that you do your things on time before the highlighted due date, so that you are at ease and you are able to avoid these penalties and interest that you are talking about.
File timely, pay as well, just so you avoid penalties. So my next one is for you. Pay as you earn touches on everyone, both employees and employers. What is it that they need to know, or rather consider?
All right, thanks, and good afternoon to you, Notsila, and the clients. So what's important about pay as you earn is that it is dictated on a monthly basis. And then secondly, we know that it is dictated from our salaries. So what happens here is that the employer deducts this tax on your behalf, and then they submit it to ERS on a monthly basis. And what we could advise is that as employees, the important thing for you to note is to always check your pay slip to see if the deduction was done correctly. And then what we encourage employers is to make sure that they submit on a monthly basis. The important thing to note for employers as they submit for PAYE is to know that the deadline for submitting for PAYE is on the 7th of that particular month. And then, as we know that the Commissioner just does give grace period, which is going to be the 14th of that particular month. But for any PAYE to be able to exist, there should be an employer, an employee, and then there should be a salary. And then that's when we are able to have PAYE being deducted.
There's a grace period. How nice of the service. Clebo, you've touched on normal income tax. You've also touched on presumptive tax. Let's talk provisional tax. What is provisional tax and when is it due?
Okay, so provisional tax is not a separate tax on its own. It's actually an advance payment of income tax. This is where we encourage, it's a system where our clients are able to make installments towards their income tax. This is solely meant to ease the burden so that at the end of the year, you don't find yourself having to pay a large amount towards your income tax. So in Eswatini, we refer to provisional tax as sibekela mthelo. It literally just means that you are able that eventually when you now file your annual income tax, you have paid in advance in installments to ensure that you do not owe a big amount when you now file. So when it comes to the deadlines, I'll go back to the first example where you have your year starting from 1 July to June. We expect that you pay your first installment towards provisional tax not later than the last day of the first 6 months. So in my example, that would be the 31st of December. We expect that you pay the first installment. And then for the second installment, we expect that you will file your provisional tax return and pay as well towards provisional tax not later than the 30th of June, which is the last day when you are closing your year. This will help you that whenever now you file your annual income tax, provisional tax is already credited into your account. It will then be used to deduct whatever payable that will be there after calculating your annual income tax. As I am highlighting all this, it is a culture that we encourage that you don't only just stick to the system where we say first installment, second installment. You can just keep on making the installments whenever you feel like, you know, I have an excess, let me just make an installment towards my income tax so that whenever you now file. And what's good, Notsila, is that if it happens that you now file your eventual annual income tax return, and it happens that when we do the calculations, your provisional taxes, which are the advance payments that you've paid before you close your year, are more than your annual income tax, you'll be refunded. You are due for a refund. After we've done our verifications and all that, you will get a refund, which it's up to you. You can choose to commit that for future debts, or it can actually be paid out to you. So we do encourage our clients to take advantage of this and never forget that they are also, it's an obligation. They are also expected to make the installments. The obligated ones are the first installment and the second installment. And then we're saying we do encourage that whenever you feel you have an excess, please ensure that you pay towards your income tax so that whenever you file your annual income tax, it's not much of a huge burden for you to settle your tax debt.
I heard refund. I think that's one thing I really like about, the service. You're saying if people commit to their obligations,
Yes.
there's a benefit to it.
Definitely.
Duduzo, I'll come back to you. What is VAT and when is it due?
So, so VAT is VAT, which is charged on vettable services and goods. And then secondly, we do know that currently the VAT which is charged is 15%. So you do notice that when you go buy as a client or as a customer at shops, you would see your receipt showing that there is VAT which is being charged, which is 15%. So basically that's the tax which we are collecting though on goods and services which are able to be charged in terms of VAT. So that's what happens on that. And then secondly, the important thing in terms of that, shops collect those VAT and then they submit it to ERS. They also submit it on a monthly basis, and the deadline for VAT is the 20th of each particular month. And once again, and the Commissioner just does open up a grace period up to the 27th of the month. So what's important for us as clients again is to notice that whatever shop you are buying on or buying from, you must see that there should be a certificate for VAT. If a shop is not VAT registered, it's not supposed to collect VAT. And only shops which are VAT registered are able to collect VAT and submit to ERS. If you're not VAT registered, you are not supposed to collect. So we also encourage clients or customers as they buy, just look out for the VAT certificate, and you should know that then your receipt should be showing that VAT was charged.
The VAT certificate is supposed to be on display.
Yes, that's
And if
correct.
I don't see it, do I have the right to request for one?
Yes, you do have the right to request. You can also go on our TaxPal app just to check if that shop is VAT registered.
Right.
If you should have any issues, you're also open to report to ERS.
Before we wrap it up, talk to us about withholding tax.
So in terms of withholding tax, this is a VAT which is charged from source. Mostly it's, for example, your rent or interest or dividends which you probably get during those transactions. So what happens here is that the person where you've put your interest or the person collecting your VAT does collect that VAT on your behalf and then submit to ERS. So what we encourage here is that they submit also once a month, 15 days after they've closed that particular month, so that they do show that on this particular month this person had so much interest and this is the VAT, this is the tax which they'd collected, and then they submit to us on ERS.
So I'd like for you to sum it up for us. Speak to our clients on why it's important that they take up or act on their tax obligations.
Thank you so much, Notsile. My parting shots would be to remind all our clients that filing and paying on time is not only just a legal obligation. Today we've learned that it's actually very important also for our country's improvement and growth. So we encourage our clients to do things on time. Notsile, I also like to encourage our clients and everybody there who's in business to ensure that you are registered with the ERS. You have a TIN. Even after you've registered, we encourage our clients to maintain their profiles. If anything changes in your profile, you've changed your location, you've changed your contact details, whatever that might change in your profile, please ensure that you notify the commissioner so that we keep an updated profile of our clients. Over and above you registering for 18, we encourage our clients to file before the due dates to avoid any possible disturbances, as well as pay on time to avoid penalties and interest. Thank you very much.
Thank you very much, Gebo Lenkosi Mahlalela and Duduzo Dlamini, both from the ERS. And today we were discussing domestic tax and why you have to file before the due date. I really do hope that you tuned in and you listened on that one. For now, we'll go for a break. After that, in-house economist Annelise Beya is on standby with the market analysis. Stay with us.